In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Cloudflare files, the web security company, the latest tech unicorn, to charge to the public market. But is it the right time, given its controversial relationship with the online message board 8chan? We'll explore. Plus, concrete and cranes. Swiss energy storage company Energy Vault gets $110 million from SoftBank's Vision Fund, the tech involving giant concrete blocks and a giant automatic crane. We'll talk to the CEO. And what's slowing economy? Chinese online retailer Alibaba defies China's slowdown amidst a trade war, with sales surpassing expectations. We'll discuss. But first, to our top story, fresh off of making waves for cutting off web support to the infamous message board 8chan, Cloudflare has filed to go public. But 8chan still looms large in Cloudflare's IPO filing. The company's S-1 called the use of its network by 8chan a, quote, risk factor. Remember, 8chan is where gunmen posted manifestos before mass shootings in El Paso, Texas, Christchurch, New Zealand this year. Cloudflare, which helps websites protect and distribute content, also booted the neo-Nazi website The Daily Stormer after the deadly 2017 protests in Charlottesville. But critics say in both cases, it should have happened sooner. To tell us more about the filing, we got our Bloomberg Deals reporter, Leanna Baker, in New York. Also there, Bloomberg Tech cybersecurity reporter, Will Turton. So first of all, Leanna, walk us through the highlights of Cloudflare's filing and the stuff we didn't know before today.
So like many other tech IPOs, especially in software, it is not profitable. It has a pretty good growth rate, though. So it's really trying to look at a competitor, Fastly, and follow in its footsteps. Fastly went public earlier this year and is doing okay. There have been some sources of mine who were asking me why Cloudflare took this long, though, to get to this point and have their filing. They had been preparing since the fall of last year for public offering.
Right. Cloudflare is a company, a name that we've heard often in conversations about companies that could go public soon, and it hasn't happened until this filing now. William, tell us a little bit more about what exactly Cloudflare does. I mean, in the case of a company like 8chan, they basically protected 8chan from being taken down in denial of service attacks.
Right. So one of Cloudflare's most popular and well-known products is what's called DDoS prevention service. It essentially protects a website from a denial of service attack. So anyone looking to attack the website and take it offline. And they offer this service to tons of websites on the internet. They think of themselves as a utility. And when you have this service, it's the most effective, or one of the most effective ways to protect your website from attacks like this.
Right, and this is where 8chan comes up, because Cloudflare, time and again, did not cut off 8chan. The site was obviously still operational until just days ago after that shooting in El Paso, Texas. Leanna, talk to us a little bit about what Cloudflare says about 8chan and how investors might take that.
It's listed as a risk in the filing, and this has really gotten a lot of attention because it's buzzy, it's relevant in the headlines. But I think that Cloudflare was really aiming in its filing today to just show the world how its financials are doing and what its prospects are. So I think it did a good job of putting out there that this is a solid company that serves the backbone of the internet, and there's been pent-up demand among investors for these sorts of companies to hit the market. A few weeks ago, Medallia went public. CrowdStrike also has a really good valuation a couple months after its IPO. So I would say Cloudflare today really is just trying to associate itself with some of these successful software IPOs from earlier this year.
That said, Cloudflare sort of only made news when they've made bad news, under criticism that it's helped keep some of these websites afloat. If you go back to 2017 and what happened in Charlottesville at the time, Cloudflare was under fire for helping support a neo-Nazi website, the Daily Stormer, and it was only after much criticism that they finally essentially took that website down by cutting off service to it. I spoke with the CEO, Matthew Prince, at the time and talked to him about their general policy of, trying to remain neutral when it comes to content online and the websites that they service. Take a listen to what he said to me then.
We turn to the experts in terrorism and illegal content, which is law enforcement, legislators, regulators, and we say, here is this content, what would you like us to do? That to me feels like the principle of due process, that they are actually politically enshrined organizations who can make these decisions, as opposed to these decisions being made based on what the political whims of me or Mark Zuckerberg or Jeff Bezos.
Now, when it came to 8chan more recently, it was, several hours after that shooting in El Paso that Cloudflare kind of finally said, all right, we're cutting them off now as well. And in a statement at the time, Prince said they have proven themselves to be lawless and that lawlessness has caused multiple tragic deaths, even if 8chan may not have violated the letter of the law in refusing to moderate their hate-filled community. They've created an environment that revels in violating its spirit. Will, expand on the sort of context here. It's very complicated issues. We're seeing, companies as big as Facebook and Google grapple with what to leave up and what to take down on their platform. And for Cloudflare, it's a slightly different story.
So Cloudflare's in a really difficult position here because they don't want to make content decisions, as you saw in that interview. Like I said earlier, Cloudflare kind of thinks of itself as a utility. The product is so good and it's hard to find other comparable products. So when you don't have Cloudflare's DDoS protection, it might be really difficult to stay online. So what that means is Cloudflare basically can decide who gets to be on the internet. They don't want to make those decisions. And as you've seen, they've only made that decision twice in removing the Daily Stormer and 8chan. So it's a really difficult position, and when you do things like remove 8chan and remove the Daily Stormer, then you give people material to say, well, why don't you remove this website or that website or whatever other website on the internet has vile content on it. So I don't think this is a business Cloudflare wants to be in. They don't want to be deciding what's on the internet and what's not.
Right, and I'm sure a big question is how they approach these issues as a public company, if and when they do go public. Will Turton and Leanna Baker, thank you so much for that context today. All right, now let's switch gears to the ongoing trade war between the U.S. and China. President Trump's decision to delay 10% tariffs on an additional $300 billion in Chinese imports hasn't stopped Beijing from vowing to hit back. China's State Council Tariff Committee said that China has, quote, no choice but to take necessary measures to retaliate. For more on what China might do, I want to bring in Bloomberg's Sarah McGregor in L.A. Sarah, the president actually heading to camera right now, as we understand it, to speak to the press. We will bring you that as we get it. And there he is right now.
Well. The economy is incredible. The consumer, probably above all else, the consumer is doing incredibly. So go ahead. Any questions? Well, I think we're going to have a very long period of wealth and success. Other countries are doing very poorly. As you know, China is doing very, very poorly. The tariffs have really bitten into China. They haven't bitten into us at all, except for the reporters that want to make it look that way, but they don't understand what's happening. The tariffs, we've taken in close to $60 billion in tariff money, and the consumer has not paid for it. Now, at some point, they may have to pay something, but they understand that, and who really understands that is our great farmer. The farmers of this country really understand it. They know we had to do something about China, and we're doing something about China. With that being said, I think we're having very good discussions with China. They very much want to make a deal. We'll see what happens. We had a deal, and they decided not to make it. Now I think they would like to have had that opportunity again, because I think they really would. I think they really missed a great opportunity. I think they feel that they missed a great opportunity. But China very much wants to make a deal. We're talking to them. We'll see what happens, yeah.
But why did you feel the need to get involved in the two congresswomen's trip to Israel?
Well, I'm only involved from the standpoint of they are very anti-Jewish and they're very anti-Israel. I think it's disgraceful, the things they've said. You have lists of, this isn't just a one-line mistake. What they've said about Israel and Jewish people is a horrible thing, and they've become the face of the Democrat Party. So I did absolutely put out a very strong statement. I think if you look at their language, if you look at what they've said, if I ever said it, it would be a horrible month, to put it mildly. So the things that they've said, Omar, Talib, what they've said is disgraceful. So I can't imagine why Israel would let them in. But if they want to let them in, they can, but I can't imagine why they would do it.
Are you worried that a prolonged trade war with China will pitch the economy into a recession?
No, I think the longer the trade war goes on, the weaker China gets and the stronger we get. We're taking in massive amounts of money, billions and billions of dollars, Steve, as you know. And I think the longer it goes, the stronger we get. I have a feeling it's going to go fairly short. I think it's going to be China's lost millions of jobs. You saw that reported today. Thousands of companies are closing in China. And I don't know, maybe they want to do this for a year. They'd love to have somebody like Biden who doesn't know what he's doing. I mean, I just put a clip where he said, we want to build up China. We want to build up China. Well, they gave us a very strong China. China's taken out over $500 billion a year for many years from our country. And that's not going to happen anymore.
How concerned are you? Let me just follow up. Sorry.
Sure,
How concerned are you about a violent crackdown by the Chinese in Hong Kong?
Well, I am concerned. I wouldn't want to see a violent crackdown. I put a little bit of a memo out last night. He's a man I like a lot. I get along with him very well, President Xi. And I said that I would be willing to bet that if he sat down with the protesters, a group of representative protesters, I'll bet he'd work it out in 15 minutes. I bet he'd work it out very quickly. I know it's not the kind of thing he does, but I think it wouldn't be a bad idea. I really believe if he sat down, they have a certain little leadership pool. If he sat down with that leadership pool, I'll bet he'd work something out very quickly. It really seems like things that could be worked out pretty easily.
Did you try to say Prime Minister Netanyahu about the Congress?
I don't want to comment about who I spoke to, but I think my social media statement pretty well speaks for itself. I feel that they are so anti-Israel, so anti-Jewish. Again, if other people made that statement, there would have been hell to pay. So, but I did speak to people over there. Yeah.
Sir, China has said that they want to retaliate, that they're going to retaliate because of the tariffs increase that you announced. What's your response to that?
Well, if they did retaliate, which I don't think they will do because we're talking to them and they're offering things that are very good, I don't think they'll retaliate. But if they did, we have the ultimate form of retaliation. I think they'd have very few jobs left in China because we'd be able to step it up. Just so you understand, I've been very mild about it. Very, very mild. There's a long way I can go. And somebody had to take on what was happening with China. We can't allow China to take out of our country $507 billion every year, not including intellectual property theft and so many other things. So we're having very good talks with China. I think things will happen, but we'll see.
If they do retaliate, will you want your team to meet with them in September as planned or no?
Well, that's true. Look, September, the meeting is still on as I understand it. But I think more importantly than September, we're talking by phone and we're having very productive talks. They would like to do something. I will tell you that. And the talk we had a few days ago with my two representatives, nobody knew what was on that talk except for myself, China, and those two people. That was a very good conversation.
You want Jay Powell to cut interest rates some more?
Jay Powell should be cutting rates because every country all over the world is cutting, and we want to stay sort of even. And I don't mind if we're higher, we're a better credit, but we're way too high. Jay Powell's made a big mistake. He raised them too fast, and he also quantitative tightened. He did quantitative tightening. That was a big mistake. $50 billion a month, and it put us in a position. And interestingly, even with normalized interest rates, President Obama was paying nothing, and we have a much better economy. And you have to look at our economy also from the day after my election, because we picked up tremendous steam the day after the election. That's not attributable to President Obama. They only did that because of us. So when somebody says from January 20th, it's not from January 20th. It's from November 9th, the day after the election. We picked up the fact that I won lifted our economy greatly. And if I didn't win, it would go down. And frankly, if for some reason that happened in the 2020 election, you'll see this economy go down the tubes. I will tell you that right now.
Mr. President, do you have any idea on when China's going to follow through on their ag purchases and crack down on fentanyl?
They want to follow through very quickly. This was part of the conversation that we had. They had a special representative actually come over and talk to us, a different group, and a message to me, a very strong message to me. They want to start doing that very quickly. I'll be honest, I'm not there yet. It's not China. I'm not there yet. We'll see what happens. I really would like to see China in a humane way solve the problem in Hong Kong. Humanely solve the problem in Hong Kong. And I think they could do it very quickly. You know, I said yesterday, I really have a lot of confidence in President Xi. I know that if he sat down with their representatives, I have no doubt he would solve that problem quickly.
In your conversations with people connected to Israel, did you encourage them to reject the concept?
No, I don't encourage or discourage. I think that if Israel allowed them to come in for the normal reasons, other than those reasons, I really believe that it would be a terrible thing for Israel. I think it would show a terrible sign. They want to do boycotts. They said horrible things about Jewish people. They said horrible things about Israel and Israelis. I think it would be a terrible thing, frankly, for Israel to let these two people who speak so badly about Israel come in. And they have become, amazingly, the face of the Democrats. The Democrats don't want to do anything to condemn them. If this were 10 years ago, or if this were maybe a different time or different people or whatever, they would be condemned for the things they've said. They've said some of the worst things I've ever heard said about Israel. So how can Israel say, oh, welcome? I don't think it would be a good thing for Israel.
Mr. President, do you think that Steve King needs to resign?
I don't know the situation with Steve King. It looked like I read a statement that supposedly he made. I haven't been briefed on it, but certainly it wasn't a very good statement.
So you're going to go to the G7 pretty soon, and I think you're going to meet with Boris Johnson.
All right, President Trump there taking questions from the press as he prepares to head. He's in Morristown, New Jersey right now. He's about to head to Manchester, New Hampshire, where he's holding a rally tonight. The vast majority of the questions there from the press about China. He says as far as he knows, the meeting in September is still on. He's having very good discussions with the Chinese, also saying, though, that China is doing very poorly and wants to make a deal. He touched on the situation in Hong Kong, again saying he'd like to see that resolved in a humane way, that he is concerned about a quote-unquote violent crackdown, and encouraging Chinese President Xi Jinping to have a personal meeting with the protesters. I want to bring back our trade reporter, Sarah McGregor. Sarah, of course, we brought you in just as the president was heading to camera to field some of these issues, and just as we were talking about China vowing to retaliate, which the president says he doesn't think will happen, yet the Chinese just said they will retaliate. So first of all, what do you make of the president's remarks just now?
Well, you know, it's always interesting when we hear from Donald Trump and directly from him what his point of view is. I thought what was very interesting is, you know, him saying that the longer the trade war goes on, the more it's going to hurt China. You know, we saw the markets yesterday in a tizzy, and a lot of the word recession being bandied about quite a bit. And of course, trade tensions are seen as really a key driver of some of this economic weakness right now in the world. And I think, you know, Donald Trump has kind of positioned this trade war as something that, you know, China will give him the deal that he wants in the end because it's going to hurt them more than it's going to hurt the U.S. And that's really been brought into question. I think, you know, the tariffs he's used have pinched China, but they've also hurt U.S. importers. And really, they're the ones paying these duties, the billions of dollars that he says that's coming into the U.S. from these tariffs. You know, I think a lot of U.S. importers and businesses would argue that they're the ones paying them.
Right, and also we saw Alibaba, huge Chinese company with a lot of exposure to the economy, blow past expectations with strong sales today. So certainly Alibaba not getting hurt in the midst of a trade war. How might the Chinese retaliate if indeed they do retaliate?
So obviously China imports fewer things from the U.S. than the U.S. imports from China, which means there's far fewer targets for China to hit with additional tariffs. That being said, in the past they've hit agricultural goods, they've hit things like whiskey from states where, Republicans have a pretty strong support base, or Donald Trump himself. And so heading into an election year, if there is more to tariff on that front, I'm sure that China's sort of doing the calculation on that and trying to figure out how to hit Trump where it hurts politically. In addition, though, we've heard about rare earth exports, cutting those off, all sorts of ways of blocking investment. Obviously, a lot of U.S. companies love the Chinese market, given all the consumers there, as well as the lower cost of production. So there's a multitude of ways.
All right, something you will continue to follow, as will all of us. Bloomberg's Sarah McGregor, thank you so much. Coming up, the woman accused of hacking Capital One, also now accused of breaching over 30 other companies. How did this all go undetected? We will discuss next. This is Bloomberg. The Seattle woman accused of hacking into Capital One's cloud and stealing personal information on more than 100 million customers also broke into the servers of more than 30 other companies, according to the U.S. government. A federal prosecutor says, quote, Thompson's crime in this case, major cyber intrusions that resulted in the theft of massive amounts of data from what now appears to be more than 30 victim companies, only exacerbates the harm Thompson has done and the threat she would pose if released. This is part of a request to not release her from custody at this time. To discuss the continuing fallout from the case, we are joined by Cavionics Vice President of Product Management, Chris Davis. This is a cybersecurity and compliance startup. Now, before that, Chris, you worked as a cloud security architect for AWS, and indeed Capital One was using AWS's cloud services, and you also worked as a cloud strategist for Oracle. So first of all, how could this woman have hacked into 30 other companies undetected?
Same way, a lot of the same methodologies were used, and at the end of the day, it's a matter of identifying the secure configurations that you have inside of the cloud. So it's one thing to move everything into that environment, and you get to take a lot of advantage of what people are looking for in the cloud, but it's that migration and that transition and getting things properly set up and maintaining that over time, and that's a very difficult proposition.
So is this a failure of the security of these companies, or is this a failure of law enforcement?
I would suggest it's neither. I would suggest it's security is an interesting beast, because all I need is one way to access your systems, to get into your systems. And if I can get access to your systems and get a foothold, then it's very easy to move laterally and see what's next door, what other systems can I compromise. And in this particular case, that's what's happened. She was able to get access to one system, and a hacker only needs one foothold, just one. And once they get in, it's a matter of moving around, identifying what target you might have, getting that data and exfilling that data, moving that data outside of the system so you can have access to it.
So, as somebody who used to work at AWS, and, I want to underscore the fact this wasn't a failing on Amazon or AWS's part.
Correct.
It was a flaw in Capital One system. That said, right. Are you concerned this will decrease consumer confidence and enterprise confidence in the cloud?
I'm not. Actually, in some small way, I'm kind of glad that some light has been brought to bear on some of the problems and some of the misconfigurations that people have. So if anything, we have to have that cloud environment. We need the agility, a lot of the technical benefits that we're looking for from the cloud environment. Quite honestly, it makes people more competitive. And from that perspective, if I know that I need to move in that direction anyways, I need to make sure I have the appropriate skill sets. I need to make sure that I have the appropriate controls, safeguards, countermeasures, and that's what I'm doing. And now I have a big flashlight, if you will, on the problem itself, and I can address it.
Well, a story we're going to continue to follow, what happens with this suspect in the Capital One case. Chris Davis with Cavionics, thanks so much. We'll be back with more of Bloomberg Tech, talking SoftBank and its first energy storage investment next. I'm Emily Chang in San Francisco. SoftBank's Vision Fund is betting big on renewable energy. The Vision Fund announcing that it is investing $110 million in the energy storage startup Energy Vault. The Swiss company system uses cranes to stack concrete blocks in a tower that can store and release energy. It is presenting the system as a bigger and more affordable solution to lithium batteries, claiming it can supply electricity to the grid 24 hours a day. Joining us to discuss, Energy Vault CEO and co-founder Robert Picconi. So how exactly does this technology work?
Sure. So we've designed a very innovative new system tower. It includes a 6-arm crane, newly designed. It includes 35,000 metric ton bricks that are all orchestrated and raised and lowered with a proprietary software stack. So that's the whole system integration. What we do is we take excess energy from solar or wind when it's produced and it's not needed. That energy is used to raise the blocks, and then when the energy is needed by the grid, we lower those blocks and discharge the energy.
And how widely deployed is it? You've said you're on 4 continents.
Yeah, correct. So we've had already a working model for the last year in Switzerland. We already announced Tata Power as a customer. In addition, we're building our first commercial scale unit in the 4th quarter in the north of Italy. And as we announced, many customer engagements on many continents, so very excited.
So what do you think the draw is for SoftBank?
I think, well, first and foremost, they share a vision for renewables, and they uniquely understand how important energy storage is to make renewables real and make renewables solve the problem of our reliance on fossil fuel. They own an energy company, so they own an energy generation company. So they've understood this beyond just being an investor. They clearly understand it. They share our passion to solve this problem.
So the system, as I understand it, and we saw there, relies on this giant automated system that has to work reliably outside in the elements year after year after year. It seems like a lot of moving parts. Do you have concerns, or is there a risk that some part could not function properly given all of that exposure and throw the whole thing off?
Actually, that's one of the beauties of the innovation. The technology that we're leveraging fundamentally is proven physics. So tower cranes, we're leveraging some unique material science, working with Cemex, one of the largest materials company in the world. So we actually aren't using normal concrete. So we're using a material composite for 95% of these bricks and raising and lowering them. So the fundamental core physics is known. Where our innovation comes in is with the proprietary machine vision software that fully automates the tower, as well as a lot of other innovation we've thought of from a sustainability perspective. And this last point is very important. So not only the materials we can use the soil right from the site that we excavate, for example, locally to make these bricks. So we don't have to bring in trucks to bring in material. So we aren't spewing emissions with trucks coming in or other transportation elements coming in. And from a sustainable perspective, we use some of the suppliers in a global supply chain ecosystem that exists today, so we can do it now.
Now, we've seen lithium-ion batteries start to be attached to the energy grid, but often they can only supply energy for hours at a time. How long can your system?
Sure, that's another one of the innovations here is long duration. So while we can support 2 to 4 hour storage, we can do 8 to 12 hours of storage. And why is that important? We can not only meet the time shifting requirement of utilities, for example, to serve the early evening when the demand spikes, but think about manufacturing companies, industries that today, industrial processes that rely on the power 24 hours a day. Desalination plants are a great example. They need that power to make drinking water 24 hours a day, and we can now provide them for the first time that power.
Now, we've seen a lot of pushback from local communities against, giant solar power plants, large wind farms, because of the fact that they don't look attractive. I mean, do you run the risk of that as well? I mean, a large concrete tower, while it might work, it might not be the most attractive thing somebody wants in their backyard.
Sure. Actually, for most of the markets where we're going to be building this system, it's out where there are solar farms, so out in typically more remote areas. Wind farms, so where wind farms are already built, there's already turbines sitting up high, and also the off-grid applications, which are pretty important for us to actually get power to remote farms, villages, et cetera, to areas that need power that can't get it from the grid. So in those locations, we don't see a lot of problems with the height.
So there's not really another company that does this way. What do you think is the most challenging or biggest, what other company is working on this in a different way that might be the most sort of challenging idea?
Sure. Actually,
what you've proposed here.
Yeah, the big thing we've really solved here, which has not been solved until now, are for the economics. So how do you get renewable energy storage down to a price when combined with solar or wind low cost? You can do it below the cost of fossil fuel. So that's really the major innovation, and we've done that through the material science, we've done that through thinking about the design, and we've done that through the sustainability. So that's really, I think, primarily what we're solving here that no one has been able to solve.
But you've got other sort of competing, crazy, bold ideas, pumping compressed air underground, releasing it through turbines. There are obviously a lot of different paths here to get to the best results and create the most amount of energy at the cheapest price. I mean, what do you think makes this better than all of those other ideas?
Yeah, sure. I think three main reasons. One is when we designed this, Emily, we didn't want to have the dependency on things like geology or geography or topology. Dams, for example, pumped hydro relying on mountains and things. So we wanted to be able to deliver this everywhere. It's so big, the problem we're solving. Secondly, sustainability. So chemical battery companies, for example, have a lot of issues both in how they get that material, how they dispose of it. The batteries degrade immediately when you install them. So through cycling, they're going to degrade. Our system doesn't degrade at all over time. So you really have to solve this with innovation across material science, across design, and thinking always about sustainability of your environmental aspect every day.
All right. Fascinating stuff. Energy Vault CEO and co-founder Robert Piconi, thank you so much for joining us on your trip through San Francisco. I know you're heading back to Switzerland.
Yes, thank you very much. Thanks, Emily.
All right. Prominent Chinese venture capitalist Kai-Fu Lee expects the company's new AI subsidiary to go public within 2 years, with revenue topping $100 million in that time. Lee spoke exclusively to our own Selena Wang.
We don't plan this ahead of time. I think based on the trajectory of innovation, I think today it's fair to say it's the fastest to $100 million revenue company in the world for AI.
Where are you now?
We're not quite there yet, but by the time we project we'll get there, which is not far from now. It'll be the fastest to reach $100 million in revenue. A lot of unicorns aren't even at $100 million revenue. And so I think it can get there pretty quickly. That is both the revenue, over 100 million, onwards towards 200 million. At that point, it should be well over a unicorn and can be listed publicly.
So what's your timeline for an IPO?
I think that would be close to the time. $100 to $200 million revenue at a price sales ratio of 10 or so, which values the company at $1 to $2 billion. So it would not be far from now. It would be less than 2 years from now.
And you wrote in your book that the era of technological discovery in AI is over, and now it's all about implementation. So how do you see this business continuing to evolve?
We're still at a very early stage in the commercialization. We're still at kind of the equivalent of early internet portals, back when everybody was using Yahoo and there wasn't even a Google yet, nor Amazon nor Facebook. So there's a lot of room to reap rewards.
Now we're seeing venture deals fall dramatically. The value of deals fell 77%. Do you think this is a long-term winter, or is it just a healthy short-term place to bring valuations back to healthy levels?
On the negative side, in an economy that is slowing down, everything slows down, including venture capital. What will happen is there will definitely be a shakeout. The top VCs will continue to thrive. I think many of the smaller first-time VCs that may have raised money using unconventional ways are going to get in trouble. So that's one part of it. But the positive side is if the economy is challenging and the valuations are down, it's a good chance for us to go shopping.
There are reports that some Chinese AI companies, including some that you're invested in, like Face++, could be added to that blacklist, which means they'd be cut off from U.S. technology. How do you see that playing out? And does it really have an impact on China's AI industry?
The AI companies are largely built on software stack that are domestically developed. So I think the impact would be much less than, say, on a company like Huawei, which has intricate hardware software products built with multiple dependencies.
The U.S. has been scrutinizing foreign deals in the U.S., and many Chinese funds have scaled back their investments, including Sinovation. How does this impact your strategy in the short term and in the long term?
In the short term, it has no impact, because U.S. investment has always been less than 5% of our total. So now it just goes from 5% to 2%. So it's inconsequential. In the long term, I think it is a pity if we have to really cause a total separation of two countries, because one could argue that artificial intelligence got to where it got to because the whole world has been able to work together.
Innovation Ventures CEO Kai-Fu Lee there. Coming up, first, the operator becomes a robot, and now the internet has bots replacing customer service reps everywhere. We'll look at who's creating these automated answerers next. This is Bloomberg. Trade war? What trade war? Alibaba shares surged Thursday after the Chinese e-commerce giant posted better than expected results, earnings, and revenue in the first quarter despite economic and geopolitical headwinds. Alibaba saw quarterly revenue rise 42% to $16.3 billion, surpassing the highest analyst estimate. Net income also beating. Joining us to discuss EMQQ founder Kevin Carter, and in Beijing, Bloomberg's Selena Wang. EMQQ is an ETF that targets growth in emerging markets. So, Kevin, how did Alibaba defy gravity or expectation?
Well, in spite of the trade wars, in spite of the tariff talks, the real story in China and emerging markets is the billions of consumers that are moving on up, and they want stuff. More and better food, more and better clothing, appliances, etc. And that's been the story, that remains the story. Even as growth has slowed in China, retail sales and consumption continues. And in emerging markets, that consumption is going online, onto a smartphone, just as it is here, but there's a leapfrogging going on because most of the traditional consumption infrastructure was never developed in China.
Selena, Alibaba co-founder Joe Tsai talked about demographics and digitization, that was what was driving these results despite what was happening macroeconomically and geopolitically. But I guess the question is, how long can that keep up?
Joseph Tsai pointed out a few factors that are really driving the growth, and you're right. The question is, how long can this support Alibaba's earning amid this broader macroeconomic slowdown and this trade war that looks like it has no end? One of them is the consumer upgrade in the developed markets. So Joseph Tsai mentioned that the developed markets, the tier 1 cities, are reaching the levels of consumptions of developed markets around the world. Now, in addition to that, their push in these lower tier cities are also starting to pay off. You're seeing rapid digitization as well as urbanization in these lower tier cities, and it's showing that they're really able to go head to head with competition with companies like PDD that are focused specifically on these lower tier markets. And they say that they are planning to invest more in these areas, that their market share is in fact growing as well. So this is a really big trend in China that seems to be defying the broader slowdown. But in addition to that, they're also investing a lot in personalization, in targeting these types of consumers better with better algorithms, as well as investing in sales promotion. So that all together is helping to boost that China commerce business by 40%, almost twice the amount of online retail sales in China.
So, Kevin, would this lead you to believe that e-commerce in general as a segment will not be impacted by trade tensions in China?
I think it's probably the sector to be affected the least.
Why?
I mean, because the tariffs and the trade war is about agricultural products on our side, manufactured goods, and EMQQ and e-commerce. It's about the 500 million people in China that still don't have a smartphone, that are going to get a smartphone. They're going to be in a 3rd or 4th tier city, and as soon as they get that, they're going to connect with their friends, they're going to play games, they're going to shop. So the secular trend of e-commerce is a one-directional thing, and it's not really part of the trade war.
And, to that point, Selena, JD.com also reported results earlier this week, strong results that said Alibaba does have increasing competition from not just JD, but Pinduoduo. What are the headwinds that Alibaba faces ahead?
Alibaba has been pretty resilient amid increasing competition from the likes of JD.com as well as from Pinduoduo and those lower tier cities. But we did see some areas of challenges. That cloud computing segment still has those negative operating margins. We also saw growth start to decelerate in that area. There's also losses at the digital and media entertainment sector that has narrowed, but they are facing increasing regulatory issues. Something that's worth pointing out is that Alibaba is actually not, it's based off of advertising. It's not truly an e-commerce company in the way that you would think of Amazon as an e-commerce company. And while we saw Tencent's online advertising really take a hit, Alibaba's business has maintained strength there, so they are doing things to keep their customers engaged and improve the advertising return on investment for their customers.
So, Kevin, if the trade war drags on, and it appears that it is going to drag on, we don't know how long, what do you think the fallout is going to be in China more broadly as an emerging market?
Well, I think that it's likely to impact the Chinese economy. It's likely to impact the sectors that are part of this story, which are the export sector, the manufacturing sector. But I would like to think that the tariffs are not going to go into effect. I mean, mathematically...
Well, there are many tariffs that are already in effect.
This is true, and in both directions. But the new ones that have been proposed, the ones that were pushed out till December, I'd like to think this is just a negotiating tactic. I mean, the mathematics of tariffs is decidedly bad. We had a trade skirmish with China 10 years ago. We put a tariff on Chinese tires. They responded by putting a tariff on on our chicken feet. But that was a tariff put in under the Obama administration. It lived for 3 years, and they've been able to go back and study it, and it saved 1,200 American tire-making jobs at a cost of $1 million per job, and it also cost 3 jobs in retail for every job it saved. And the American taxpayer funded that. So I'd like to think the mathematics of this are clear enough that we won't really do the things we're threatening. But if we do, the market's, I guess, voting now that we're going to have likely a recession in our country. And I frankly think it could be bad if we go ahead with the tariffs as described.
So 15 seconds, so where does that mean you're placing your bets? Quickly.
EMQQ, the emerging market internet companies, are not really part of the trade war. This is about people all over the world consuming, wanting stuff, using their smartphones.
All right. EMQQ founder Kevin Carter, thank you for joining us, as well as Bloomberg's Selena Wang on an early morning in Beijing there. Thank you, Selena. That does it for this edition of Bloomberg Technology. We're live streaming on Twitter. Check us out there at Technology. Follow our global breaking news network, TikTok, on Twitter as well. This is Bloomberg.